Hi everyone. So today is Wednesday, the 29th of April. We are 2.5 hours, just under 2.5 hours before the US session opens. I'm going to just make this a quick video because today the summary is that we are just going to coast until we get to FOMC at 7 o'clock UK time. And then we also have these major announcements today. So not Apple, Google, Microsoft, Amazon, Meta, and I think Qualcomm are announcing today as well. So they are just some of the things I'm looking at. But what strikes me today is I have seen a little bit of increase in the shorting positions of these stocks. So I'm not sure if that translates into the possibility that we'll see this pump and dump over the next 24 hours. And the reason I say that is because a lot of the news, a lot of the anticipation is usually baked in prior to earnings. And that's part the reason for the rally, by the way, when we see this seasonal rally in April. It's usually the first sign of positive earnings being baked in, and then you have this huge sell-off that's likely to come into May. So I'm going to wait for that. I think we also have, I'm not sure I mentioned FOMC announcing today. I think we have a couple of other interesting ones. We have durable goods. We have what else? Durable goods. We have, I think we've got crude inventories, crude oil inventories as well. So, and looking at oil right now, we can see that's already up on the day. So, that's going to have an inverse, generally creates a little bit of a panic in the in the equity markets as well. So today I'm ushering towards the downside, despite seeing a little bit of strength here in the Nasdaq. What are we? Nearly kind of 3/4 up, and the ES following. Oh, it's neither here or there, to be honest. The fact that the Nasdaq is up is like a sign that we may see some kind of strength today, but it's so negligible. I am hesitant to say that this is going to be leading, and we could see this flip very, very quickly. So, what's happening on the options markets before we go into the key levels? And let's take a look here. I'll also get the chart up here in the background and then get the uh, options visibility there as well. Just one moment. Let's get that back up. Right, let's hit refresh on this. Oh, interesting. Wow. So things have certainly changed since yesterday. We had this. Is that right? Wow. Okay. This is interesting. So yesterday, you may recall the call wall was at 7,200. You'll remember that we had that at 7,200, and then I added the 30 points worth of fair value premium to the futures. So yesterday, have I still got that on the chart? No, I'm mapping today. So yesterday, you'll remember it was at 7,230. That was the highest point I was calling in the day because of the options call wall that we had there. And just as a reminder for those of you who are new, the call wall is basically uh, where dealers in the market need to hedge against their exposures, and that hedging, in other words, at this point, they would be selling into the market. That hedging then has a potential downside into the market because they're actively selling, and that pressure may just pull the markets down. But right now, so that was yesterday. Today, the call wall is now at 7,150, which means that dealers are likely to be selling at this level to hedge any exposure north of that. So there is more, this is saying more downside risk. And then if we get down to as far as where we are here, 7,000, look, there is a big gap between these two now. So that doesn't necessarily say we're going to 7,000, but what we are seeing just by looking at this is that the market today lends itself very much to some volatility, and that is usually the case prior to FOMC as well. So this is going to be an interesting day. I think we may see 7,000 at some point in the next kind of 48 hours. I'm willing to put that here to say that, okay, let's say 7,000 or 70, where's the volume here? Hey, it could even go lower than that. We may slip below that. But let's say by the end of this week, we start seeing 7,000. Here we go. So but anywhere between these two levels. So let's say that by the end of this week, let's mark this as um, purple. Or this purple. Let's get that quite thick, and let's just put a date here of where are we today? 29th, the 30th, and the 1st of May. Let's say the 1st of May. This is the kind of level I would hope for. Um, Again, please keep in mind these are not predictions. These are expectations based on today's logic. Things could change by the time the market opens the next 2 to 3 hours, right? We have to have that attitude when we're looking at the markets because no one is ever going to tell you what is going to happen. Anyone who claims to know how to predict the markets, they are a liar. Because we can't do that. We can just gather all the information that's available and then we use that to our best advantage and say, okay, look, this is likely to give us an edge. So we've looked at the options markets. We can see where the call walls are, the put walls are, what the net gamma exposure looks like, and then we can translate that back into the volume profiles here. So this is the volume profiles of what is actually happening in the futures market right now. And we could see a weaker volume here at 7,200. We said yesterday that that was likely to be the peak, but because of earnings today, take note, because of earnings today, um, after the markets, we may see an initial pump tomorrow. We may see that the markets go, there'll be this sudden sense of craziness that, hold on, what's going, we're rallying. This may happen. There is a likelihood that this happens. And what that essentially is it's just a point where the market makers are taking or scooping up the limit orders that are out there and any stop losses and things like that. So we do see these spikes happen and then it will just come back into its economic range where it's fundamentally supported. But as I've also said a few weeks ago, the fundamental support should be at this level here, 6650. I know it says 6624, but I had it at 6650 when I was talking about it, I think. So this major level here is where I want to see prices go because there is a bit more fundamental support. And also, Donald Trump said yesterday in one of his videos, he said it about 4 or 5 days ago actually, that I thought the markets would plummet, but they didn't. I thought the markets will go down 20-25%, but they didn't. So hold on, when has Donald Trump ever been wrong, according to his own ego? So the fact that it hasn't, he's like, I feel he's preparing us for saying that, hey, listen, when it does go down 20-25%, this kind of almost 1,400 points from here, he's going to say, hey, I kind of expected that, these are the markets, that's what you pay for Iran not having a nuclear weapon or whatever it is. And also, what else did he say? Oil price is going to 200. He goes, I thought they were going to go to 200, but they didn't. So what he's actually doing is, I feel, just preparing everyone for the prices to go to 200. So I don't think we've seen the major economic panic yet, which is why I'm still holding on to this level, 6650. I'm holding on to that, and I'm holding for some panic downwards into that. Now, the question is, what proof do I have? The proof I have is just the thinner volume profiles around here. The proof I have is the options behavior over here. Just to say that, okay, we've got huge activity over here, right? My mouse is going crazy. We've got some huge activity around here. So decent net exposure over there. This might change throughout the course of the day, to be honest. And we also have the hedge fund issue as well. We don't know for sure how much they've been covering. Let's see if I type in a price. One moment. Let's see if I could get that. I'm building this hedge fund dashboard in real time, by the way, so it is a bit stale right now. It's a little bit stale, but let's take a look at the stress matrix here. So this is what I was saying. So if I bring this down, it is, come on, right? Where are we? Let's say I go to 7,000. That kind of that kind of shows that all the, oh wow, that would tell us that all contracts, a lot of contracts would have been covered by then. So 21, let's take this down, hold on. That shows us that 89,000 of the 412,000 contracts are covered at that, will have to be covered at that point. And as we go down, these two should really not be related. I've got to change that. But if we go to 7250, so hey, look, there's not much of a price drop required for us to then assume that a lot of the outstanding shorts are the margin stress is covered. So yeah, this is going to be interesting to see what report comes out. So Friday for me is a very, very important announcement by the CFTC. Although it's rated 2 on investing.com, I think it's an important one because we can model where those hedge funds sit along with the other actors like asset managers and the dealers and what their books look like. So everything seems to be balancing out here. I think we're going to summarize. Let's summarize by the end of the week. My opinion is that we're going to be closer to 7,000 by the end of the week. So today, over the next 24 hours, let's put a mark here. Over the next 24 hours, one moment. One second. Clicking the wrong buttons here. Yeah, so over the next 24 hours, let's say into kind of Thursday, close of business. What is it? 30th April, close of business. I would say the levels I want to put here, 30th close, are going to be 230, just in case that call wall reappears, and whoever had interest at that kind of level, if they reappear in the market, then we know we're protected here. So that's where I'll say the top level is at 230, and then of course where I hope for the price. Yeah, so sorry. This is the worst case scenario for me. And what else I'm going to say is the best case scenario that we stay within that 7150, which is, let me just check, that was 7150 again. One moment. Let's get that back up. 71. So it was 7150 here on the SPX. Add 30 points to that. 7180. So let's go to right over here. This is where I see us kind of hovering around today. Let's remove that. I'll put that one in. Put that one in red. Will that be good? No. Let's try that again. Put that in red. Get that a bit thick. Let's just put a small note here saying 29th April. Close of business. So this is where I think we're the kind of levels we're looking at. Already we're here. Can you see we're kind of hovering around that line anyway? But I think my point is that I think this is kind of going to be where the peak is until that gamma exposure. If that changes, then this changes. But right now, this is where the market's looking for the next few days. And this is a brave thing for me to put this out straight away because, you know, when we're wrong, we look stupid. But it's not for that. It's for, as I said, we have to have an opinion. If you haven't got an opinion, then you are guessing your way through the market and you're not going to be able to quantify the risk. Okay. So there are other interesting things that I can see here, but I think I'll just keep quiet for now. Let me just see one more thing which looks a little bit interesting. It's just caught my eye here. Is it interesting? I guess so. Yeah, hey, this is interesting. Hey, this is quite a bearish sentiment here. So this supports the case for the 1st of May. You can see here that I didn't notice this, but this 50-day moving average or 50 period moving average moving through the 200 has just started now on a 30-minute basis. So on a 15-minute basis, that will be well through then, right? As well through and diverting a bit. But okay, that's a bit more of a negative bearish sentiment there. But okay, we'll stick with those levels. Let me make this look tidy. Please hit subscribe, because I don't know whether or not I'm starting to get followed by robots or real people. So I want to take this further and support the novice newbie demand out there to understand the markets. My interest is very, very specifically that people don't get caught out for the wrong reasons, because there are a lot of scrupulous brokers out there who are willing to take advantage, especially of the younger generation. Be very, very careful who you sign up to. Things like what you need to look out for. I'll do another video on this if there is demand, but you need to look out for specific things when you sign up to some of the biggest name brokers out there. Please be very, very careful. Okay, so that's a wrap. We'll check in on this tomorrow, and hopefully it will be good news.